4 investing trends that died this year. How's it going, everybody? Welcome back to the channel. My name is Jay, and it's been a rough year for a lot of things. But here are 4 formerly hot investing trends that died this past year. First up is crypto yield farming. If you're unfamiliar with what crypto yield farming is, it's when you buy cryptocurrency, doesn't matter which one, and the brokerage which you're holding your cryptocurrency on says, hey, we'll pay you 10% interest if you let us take your crypto and use it as collateral on crypto loans we're making to other people. You say, sounds great, go ahead. And then they steal it from you. The lesson, as always, is if something seems too good to be true, it probably is. And the higher the interest rate on a loan, the riskier that loan is. It doesn't matter if the currency being used as collateral features a bunch of old dead guys or cartoon dogs. And speaking of cartoon animals, NFTs! What if I told you that for the price of a house in an upper middle class neighborhood, you could own a JPEG of a monkey and get exclusive access to a Discord server with other people who have paid hundreds of thousands of dollars for cartoon monkeys? Is that something you might be interested in? Well, for a whole bunch of people, including celebrities like Eminem, Snoop Dogg, Heidi Klum, and Justin Bieber, that seemed like a great use of their money. Seth Green not only spent a few $100,000 on a Bored Ape Yacht Club NFT, but then when that NFT got stolen from him, he paid close to $300,000 to buy it back from the person that stole it. And while I admit there's some pretty interesting technology and possible use cases with NFTs, that ain't it. I mean, seriously, how did we not realize we are at the top of an overheated market when these stupid things were selling for hundreds of thousands and sometimes millions of dollars a piece every other day? Continuing with our primate theme, the next flashing neon sign that we are at the top of a stupidly hot market is the next investing trend that died in this past year: meme stocks. Let me transport you back to a more innocent time. The year was 2021. Robinhood was still a reputable place to buy and sell stock. And thousands of people on Reddit were about to learn what the term short squeeze meant. Over the span of about 2 weeks, shares of GameStop shot up over 1,500%, sending investors everywhere into a craze. And a whole lot of investors who missed that original party joined up with the hype investors who did get a taste of that action, hoping to finally catch their dragon in the form of AMC, BlackBerry, or countless other struggling companies that regularly got hyped up with a few rocket emojis. In fact, there are still thousands of people on Reddit convinced that the real GME squeeze hasn't even happened yet. In other news, the moon landing was faked and birds aren't real. But the meme stock craze did show that individual investors did have some power over the big Wall Street firms. But the one area where Wall Street insiders always got to profit, and us everyday investors got left out in the cold, was with IPOs. An IPO, or initial public offering, is the very first time shares of a company are offered for trading to the public. And the problem was that the IPO price that gets quoted in all the media was a price only really available to huge Wall Street firms and select insiders. By the time the shares hit the actual open market, prices would often be 20, 30, or even 50% higher, locking everyday investors like you and me out of the real gains. But then a new way to take companies public started gaining popularity: the SPAC, or Special Purpose Acquisition Company. SPACs revolutionized the way you could take a company public. You see, the traditional IPO process is slow. It takes a lot of time and involves a lot of people digging into and really scrutinizing the financial statements of the company about to IPO. But with a SPAC, you can take your company public without any of those pesky annoyances. With a SPAC, a shell company with no real business operations whatsoever will IPO on a stock exchange in order to raise money with the specific intent of acquiring and merging with another currently privately held company. Once that merger transaction is complete, voila! The once private company is now a publicly traded company on the stock market. Back in 2009, there was only one SPAC IPO the entire year. In 2021, there were 613 companies. that went public via SPAC. And the best part is, everyday investors like you and I, we can invest in these SPACs before the mergers even take place. We can get in pre-IPO, as it were. And some companies you are no doubt familiar with went public via SPAC. Names like Virgin Galactic, SoFi, DraftKings. There's even a SPAC right now to take Donald Trump's social media network public. And if there's one thing we know, it's that guy's business dealings never turn out bad for anyone. So let's take a look at how some popular SPACs have performed and... oh, yeah. Looks like there is something to all that scrutiny and financial oversight in the traditional IPO process, huh? Well, if there's one lesson we can take away from this, it's that you should never invest on hypes and trends. So subscribe if you haven't already, because that's what this channel is all about. And I'll see you next time.